Coming up on Market to Market. Monsanto fights to keep Roundup off the domestic carcinogen list. And agriculture's changing role in politics on the eve of the nation's first presidential test. Those stories and market analysis with Sue Martin next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, January 29 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Despite the recent hits to energy, manufacturing, and Wall Street, consumers were still willing to open their pocketbooks last month. According to the Conference Board, consumer confidence rose as oil prices fell amidst a poor industrial climate in December. Commerce data showed a 5.1% fall in durable goods orders. Excluding transportation, the volume declined 2.1% to close out 2015. The lower output pushed U.S. gross domestic product down to an annualized rate of 0.7% in the final quarter of last year. However, GDP for the entire year rose 2.4%. The Federal Reserve Board took a closer look at the cards being dealt for the world's economic future and chose to check instead of raise interest rates. Wall Street, expecting a different outcome, fell more than 200 points on the news, only to rebound at the end of the week. The current macro-level struggle on Wall Street to make a profit and maintain investor confidence can always be found at a micro level. Case in point is Monsanto. As the seed division continues to combat attempts to add the phrase "contains GMO products" to food labels, the chemical division is embroiled in a battle of its own.
Late last week, Monsanto Company filed a lawsuit in California seeking to prevent lawmakers there from adding glyphosate, the main ingredient in its Roundup herbicide, to the state's list of known carcinogens. California law requires the state to maintain a list of deadly chemicals to keep residents informed of risk. The Golden State's Office of Environmental Health Hazard Assessment said in September that it planned to classify the compound as a probable cancer-causing agent, echoing World Health Organization action in 2015. Roundup, used worldwide, generated $4.8 billion in returns for Monsanto in fiscal 2015. Genetically modified corn and soybean crops which tolerate the weed killer are part of the backbone of the U.S. farm economy. The St. Louis, Missouri-based agricultural giant cited decades of studies that have deemed the herbicide safe, including positive conclusions by the same California agency in 2007. Monsanto argues, in this instance, designation under California's Proposition 65 would cede authority to an unelected, undemocratic, unaccountable, and foreign body, saying WHO's classification is inconsistent with regulatory bodies in the U.S. and around the world. To much uproar, the European Food Safety Authority, which advises EU policymakers, issued an opinion in November 2015 that glyphosate is unlikely to cause cancer. In 2013, Market to Market reported on the dramatic increase of cancer and birth defects in 2 Argentine provinces. The new cases corresponded with the introduction of genetically engineered crops to the South American country in 1996. That was followed by the alleged misuse of pesticides and herbicides. Under the proposal, all companies selling products in California which contain glyphosate would be required to provide a clear and reasonable warning the chemical is known to cause cancer. Monsanto contends adding Roundup to the Golden State's list of carcinogens would violate the company's First Amendment rights and damage its reputation. Since the WHO decision last year, numerous lawsuits have been filed against Monsanto, alleging the company knew the potential health dangers of glyphosate for decades.
The Constitution, which guarantees the First Amendment right of free speech, was drafted when the country was predominantly rural. While there are many influential farm state lawmakers in Congress today, specific rural issues rarely dominate the agenda. Few presidents elected in the past half-century have had direct links to the land. And the last two State of the Union addresses gave little or no mention of agriculture. Regardless of the transition of most political issues from rural to urban, there has been no change in where the first steps towards the Oval Office are made. Paul Yeager explains.
Rural America again serves as the first battleground of the presidential campaign sequence. Iowa is where the tall corn and animals dominate the national perception of this state. So too does the presence of candidates seeking the nation's highest office every 4 years. If an appearance at the Iowa State Fair counts as dealing with farm issues, then the candidates still in the race pass this exercise by flipping pork chops and getting selfies with the famous butter cow. Nearly 1/3 of the Hawkeye State's economy is agriculturally based, but issues of that subject have not garnered equal time on the stump this cycle.
The rule of law is a sacred value in our country that we need to enforce our border.
In March of 2015, Iowa agricultural and energy businessman Bruce Rastetter hosted the Iowa Ag Summit. 24 were invited from both parties, but only 9 Republican candidates attended and took questions on issues impacting farmers from Rastetter. However, one candidate didn't take the populist company line when it came to renewable fuels.
How about we deal with the elephant in the room right away? A week ago, you talked to Club for Growth, and you talked about that you're opposed to ethanol subsidies. And those subsidies, as you're aware, were eliminated in 2011. Talk about that.
Well, look, my view on ethanol and biofuels, I support biofuels and ethanol. I think biofuels have a major role in the energy market and that they're going to continue to have a growing role. I also don't think, and you and I have talked about this a number of times before, I don't think Washington should be picking winners and losers. When it comes to energy, I think we should have an all-of-the-above approach, but it should be driven by the market.
Senator Ted Cruz was not invited to last week's Iowa Renewable Fuel Summit because of this stance. The Iowa Renewable Fuels Association Board of Directors asked Republican and Democratic candidates to appear that they deem to have favorable views on biofuels. Past Iowa caucus winners Mike Huckabee and Rick Santorum, along with Carly Fiorina and Donald Trump, all accepted the invitation. The New York businessman had a rare scripted moment in his campaign during his time on stage.
The RFS, which is Renewable Fuel Standard, is an important tool in the mission to achieve energy independence for the United States. I will do all that is in my power as president to achieve that goal.
Huckabee, the former Arkansas governor, took the opportunity to highlight policy differences with Mr. Cruz.
Have some people running for president who think that maybe we ought to get rid of the RFS. Maybe instead we ought to get rid of the candidates who don't have a clue about the value of agriculture in America and make sure that we don't waste billions of dollars of infrastructure.
Santorum, the former Pennsylvania senator, was making his third appearance at the summit, took his time to encourage renewable fuel advocates to support a candidate that has their best interest in mind.
If Iowa is not going to stand and support the RFS, why do you think the rest of the country is going to? You will kill RFS, and Iowa will have her fingerprints on the weapon.
Businesswoman Fiorina also spoke in favor of the RFS and also free trade, but made some of her strongest comments against the Environmental Protection Agency, recounting a story of a farm tour she took last summer.
That patchway of grass in the middle of that farmer's soybean field, he has a lot more reason to manage that water well, to protect his land, to protect his investment, to protect his family, to protect his community.
Iowa has served more as a backdrop for the campaigns than a backbone of their candidacies.
I think it is a little different. I don't want to overdo it, but I think you have seen a reluctance from some candidates to talk a whole lot about agriculture. There's issues out there like the Farm Bill, like trade issues, and like the renewable fuel standard that they sometimes some of them would rather avoid talking about.
And Shaw, the head of the Iowa Renewable Fuels Association and a former candidate for Congress in Iowa, knows the campaign is an education process.
The East Coast or West Coast media likes to just say, oh, they come down and they bow down to ethanol in Iowa. It's all political. And look, I'm not naive. I understand that politics plays a role here. But I think the role that politics plays with the Iowa caucus is it opens their ears. It forces them to find a position that is defensible.
Even Secretary of Agriculture Tom Vilsack, a former presidential candidate himself, advised summit attendees to look beyond the first talking point on agriculture.
Shoot, don't ask them just about the RFS. Ask them about, well, what do you think about the Navy's purchase of biofuel? Do you think that's a good idea? What about this idea of exports? Do you think that's a good idea? You think trade, is that a good idea? What about research? Is that a good idea? I'd be really, really interested in the answers to those.
After the caucus results are harvested Monday night, the candidates will market their results. Iowans will be left with empty town halls and likely few answers on where candidates stand on agricultural issues outside of biofuels. For Market to Market, I'm Paul Yeager.
Next, the Market to Market Report.
Unable to shake off competitive prices, along with good weather in other countries, the grain markets moved sideways, even with a late-week rally spurred on by fund purchases. For the week, March wheat gained 4 cents, while the nearby corn contract advanced almost 2 cents. Dry South American weather and a canceled Chinese order put more pressure on soybeans. However, the March contract clawed its way back to gain 6 cents. March meal managed to keep up, rising $3.90 per ton. In the softs, March cotton lost $1.32 per hundredweight. In the dairy parlor, February Class 3 milk futures put 8 cents back on the board. Over in livestock, the April cattle contract gained 92 cents, March feeders fell 65 cents, and the April lean hog contract gained $1.70. In the currency markets, the U.S. dollar index was unchanged. Crude continued its comeback as the March contract gained $1.43 per barrel. COMEX gold gained $20.10 per ounce, and the Goldman Sachs Commodity Index increased 11 points to settle at 301.25. Here now to lend us her insight on these and other trends is one of our regular market analysts, Sue Martin. Sue, welcome back.
Thank you, Mike.
Now, we've seen this dollar hang in there versus all these other currencies. We've got the yen now causing us some trouble. But as we look at this wheat market, it's also managed to hang in there. Is this a bullish sign as we look out for the rest of this winter wheat growing season?
Well, I think that like cotton, like corn and soybeans, all those markets, agricultural markets, are in sideways markets. And that many times can be a basing factor after a long break. And of course, this market's been coming off of the highs of 2012, so it's getting to be an old bearish market. And I think, what more can you throw at it that's bearish? The news today on Friday, the Russian Ag Ministry had met with the Deputy Prime Minister in hopes of dropping the export tax for wheat. That had been talked about, that they were going to have that meeting, and that broke the market here. And then all of a sudden it found out that no, they're going to keep the export tax. It had thought that they would do so to drop it in order to be competitive against Argentina.
Gotcha.
Because Argentina is at 0%. So that did not happen, and the market rallied back today.
So do you expect to see that rally carry on into next week?
Well, I think you've got a wheat market that when it starts to get up towards $4.90 to the $5 level, it has issues. And then when it gets down around the $4.70 to $4.60 area, it has support. It's kind of caught in a narrow range. You've got moisture coming across, possibly across the hard red winter wheat areas, and that was thought to be a little negative, but it depends on how that storm shifts. But on the same token, you also have Argentina that did mark a deal here this week with Egypt to export wheat. And it's going to be interesting to see because, yeah, they don't have the irrigate in it, but they also have poor quality wheat. You know, about, I want to say almost half of their wheat is of poor quality.
Okay.
So kind of what you would call feed wheat.
Gotcha.
I guess I think I see this market still continuing on sideways, and I would probably suspect that we've got, as farmers are getting closer here towards the 1st of March, going into February, there's bills to pay and loans to pay off, and I think you're going to see wheat move.
And in the meantime, watch that range, 470 up to 490, pushing $5 and trade
It's not a very sexy market right now.
And that's true kind of across the board. Speaking of not sexy, let's talk the corn market, Sue. 2-cent move. Where are we going from here?
Well, you know, the corn market, I think, if you can get it up around 390, there's trouble. Again, there's a fair amount of corn that's going to move here. Your ethanol industry is slowing down on production, which means they might not be so ambitious to be buying right now at a time when farmers may be having to sell corn just like the wheat farmer. And so you would think that would be negative, and yet that corn market's vibrant. It can drop and the next day put it all back on. It's very schizophrenic right now.
Okay.
And I guess I don't see any changes in that for the moment. However, that won't hold true for much of the year when we get going.
So for a lot of producers that are still sitting on some old crop corn, do you advise them to just go ahead and keep storing until we can break out of this range, or do you start metering out some sales at the upper end?
Well, my recommendation to them is, you know, interest is an expense. And you can own options. There's no volatility, very low volatility in these grains. So you can sell your corn, but I really do recommend re-owning it back on the board. I'm not saying that because I'm a broker. I'm saying it because prices are cheap. They've been wallowing. And this certainly, I think, is a year that's going to be filled with some surprises. So I think a producer wants to have that potential, and it'll make him feel more comfortable. And you can own those options probably cheaper than your interest at the bank.
So would you be selling both old crop and making some sales on new crop corn and re-owning with options, or would you just be practicing that strategy with old crop corn?
I'd practice that strategy with the old crop, and I would move out to the September time frame.
Okay.
That lets you get through the summer for the most part, well into August, and you're going to know by then what's going on. And in the meantime, new crop, if you have this urge and you can see yourself breaking even, and you want to market, you know, we're not in the game to just break even. We're here to make money. And so, again, I would definitely have some way of ownership back on new crop as well. I'm not as bearish as probably many are out there.
Okay, so you think we could see 50-cent rally, Sue? What does D16 corn look like at harvest?
Well, hard to say at harvest because it depends on, but this is going to be, you know, every summer is a year of, new crop year is a year of weather. But this one's really got some important things going for it. First off, our foreign production deficits, which means the rest of the world, U.S. taken out of the picture, how badly do they need to import, is much greater this year on corn and on soybeans. And that's even with Argentina and Brazil included in those numbers.
Okay.
So that says, U.S., you have a weather problem, prices are going up, not down.
Okay. Well, now, talking of rest of the world production, as we move down and take a look at the soybean market, we've got a question from one of our followers on Facebook. We invite all of you to follow us on Facebook. You can find us at Market to Market there or on Twitter. Look us up. We'd love to get your questions. This one is from a friend of the program. This is Frank down in southwestern Iowa in Cumberland. He wonders, is the dry weather pattern in South America affecting a large portion of their crop producing area?
It's about 20%, I think, right now, maybe 25. The next 7 to 10 days is expected to continue to be dry, very little rainfall, and probably some warm temperatures, mid-90s, something like that. So nothing really getting help, so to speak, but they're just getting going. Argentina did book a deal, or I should say they did release, the Argentine government released export registrations for up to 12.2 million metric tons of corn. Our contention has been all along that the Argentine government's going to see the farmer moving wheat and corn first because there's no taxes, and he's going to drag his feet on the soybeans. And of course, the products, I think, well, about a week ago, Argentina's government dropped the import tariffs on soybeans from neighboring countries. mainly on soybeans. And what are they going to do with those beans? The fact they did that shows they're not getting enough out of the farmer. Now, some will say, well, the farmer probably doesn't have them then. Well, that'd be music to our ears, but I don't think that's the case. I just think they're hanging on and gratifying themselves with other commodities
So
right
they're
now.
crushing beans from Brazil and Chile rather than domestic beans.
Exactly. And then what they'll do is they'll export that meal and oil, and of course they're the world's largest exporter of meal. But the good news is that even in the face of all that, export sales today on soy meal actually got above a year ago's, or the 5-year average actually, and we're doing way more than what we need to do weekly to meet the USDA expectation. So now that we're above the 5-year average, and then you look at on soybeans, and we even are like neck to neck, like 0.1% under the 5-year average. And this is with all the bearish talk. And yes, China did cancel 395,000 metric tons this week. Well, you know, over the past 4 to 5 years, I've seen them do that many times. The market breaks like a ton of bricks, and China sort of walks in and buys it right back up.
You bet. So they're
I wouldn't
still
underestimate
using the
them.
beans.
That's right. And this talk of, well, they're slowing down in their buying because they're going on their holiday, week-long holiday for Lunar New Year. Well, no. They're always around. They're just, you don't think they're there, but they're never out of that market.
When a deal's there, they'll
bet.
take it. Okay, so broadly, as we look out to this summer, trend up or down in beans, Sue?
Well, I like corn better than beans.
Okay.
But I do think that the bean market, you give a weather market here, and it's going to have potential too.
Okay.
But I think we do have some resistance up around this $9 level. And so that's probably more psychological than anything. And of course, that sideways market, it could shove this market right back down to the seasonal lows around that 850 level, 848, 850.
Okay. That'd be a buying point, and then look to maybe make some sales up close to 9 until we see what happens.
And then again, I'd probably come back with some call spreads out in September beans, but I do like corn much better than beans.
Okay. Now let's jump into the livestock markets. We've seen a lot of volatility. A lot of the trade has been under intense discussion here over the past couple weeks. We saw live cattle climb a little bit, put almost $1 on. Do we have strength going into next week in this market, Sue?
Well, you know, we ended the day, we did almost close to a limit down move on feeders. You know, this market is a little bipolar, or whatever you want to call it, schizophrenic. And it does have volatility. I guess I don't have the same sentiments towards the volatility that some people do. I think that the volatility does allow us to get trades off at times. We just have to be willing to jump. And in the meantime, I think that the cash market was kind of a little bit all over the map today, but there was some talk of 135 being paid. And so I think that that was good news in the face of a soft market, albeit the February fats held on and the Aprils were kind of okay. The deferreds were not, and the feeders were soft. I think what you've seen today was more of a concern about the cattle inventory report.
And tell us a little bit about what we saw in that report.
Well, the cattle inventory report was termed as bearish. All cattle and calves inventory was 103%. Trade was looking for 102, so okay, that's a little negative. The calf crop was right in line with what traders expected at 102%, but calves 500 pounds and under was 104%. And then if you take heifers that are going to calf for beef replacement cows, they were 106%. What this says is that we're going to have a good number of placements as we go through this year and on into next year. So from August feeders on out, market might not be so special, and we'll maybe want to use some rallies. But then the good news is the enthusiasm should be more up front if we're going to have it.
Okay.
And of course, this storm will be interesting to see. How bad is the storm? How bad do feedlot conditions get? Could make a difference as to the demand for feeders. But there was some pretty good demand at the early part of this week for feeder cattle.
Yeah.
So I think that. It's interesting because there's an old seasonal on cattle, and this market has been following it almost textbook. And it calls for a peak here around the 30th. Well, we peaked today, and then down we came, and that's on feeder cattle. And then you get into next Monday, Tuesday, and it puts a low in, and then you start moving up into the middle of the month.
Okay.
So I think we're following that pattern, and I don't have any reason to not believe we aren't going to get it. August fats are looking awfully underpriced right at the moment. So we'll see. I wouldn't want them coming back under 115 or 116, something like that. But I do think that there is something better. I think the market wants to push itself a little bit higher before we
fully
hit
commit
it again.
to the cycle.
Yes.
Okay. All right. Now, bucking the trend in the livestock is the hog market. We saw them put on almost $2 over this week. It's been on a steady climb, Sue, over the past several weeks. Can it maintain that as we march through first quarter 2016?
Well, I'm friendly the hog market. You know, if you looked at data out of China for the National Bureau of Statistics, and then you look at what the Ministry of Agriculture puts out, well, you know, they're like putting out two separate stories. But basically, the National Bureau of Statistics would have you to believe, well, the Ministry of Agriculture basically lets you believe that the numbers have been very stable through all of 2015. National Bureau of Statistics is a little bit all over the map. First quarter, you lost 50 million head. The second quarter, you put 30 million back on, that type of thing. But the interesting fact is demand for soy meal has been really good this last year. Why? They must have hog numbers they're feeding.
It's growing.
Some say that they were feeding meal at the expense of corn.
Okay.
Maybe. I still think that's
so
numbers.
There's some uncertainty in that market.
Yes, and I think that plays into this bean market, why we're seeing the interest that we've been seeing at this time.
And we will talk hog pricing more in the Market Plus online. Thank you, Sue. That wraps up the broadcast portion of Market to Market, but we will continue our discussion, as I mentioned, and answer some more of your questions in the Market Plus segment available on our website. While you're there, you can check out our social media outlets and interact with us. And join us again next week when we'll examine how the byproducts of oil exploration are both a blessing and a curse. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.